Welcome to Freed on Business. He grew up in South Florida, has been in business here since the early 90s, and has closed over $3 billion in deals. He's seen it all. He always has an opinion, and he's always ready to share it. Informed, entertaining, and connected, he has his finger on the pulse of South Florida's business community. He's Jim Freed, and this is Freed on Business.
Oh, yeah, we've got a great show for everybody today. I've got two of my favorite real estate experts, a couple of folks that have been in the business quite some time together. We all probably have a total of over 100 years of experience in the business. We've been through many, many cycles. We'll have Jonathan Stein, one of the senior members of the Inland Real Estate team in Chicago. We'll have James McCarthy on, a senior real estate lender out of New York with Jameson Capital. We'll be talking about things they've seen in the past, what they're seeing today, what the implications of today are based on what they know from the past. And the one thing we all know is that we have no idea what's going to happen, but there will be certain things that you can do today to position yourself for success going forward in the transitional period that we're in now and when the market stabilizes on the backside. So remember to stay with us. We've got some great stuff going today, lots of stuff, and it'll be information that you can put to use today that'll make your life better immediately. And remember, two great people, one great place. Stick with us. It'll be terrific. Mr. Mendoza, it's yours. Hey, everybody. We're entering our 11th season of sponsorship by Warren Henry. We want to thank the folks at Warren Henry Automotive for all their support. If you're looking to buy or lease a car, you want to get every advantage that you can. That's why you have to check out Warren Henry, Land Rover, Range Rover, Infiniti, and Jaguar at 151st and Biscayne here in Miami. Up in Gainesville, I'll be traveling to Gainesville in a couple of weeks, and I'll be looking for my new Audi up there. Maybe an A6, maybe an A8, maybe that fancy sports car. We'll see. Hey, and down in the Keys, they've got them all. Maybe I'll just go down there and get a Jeep. What do all these places have in common? Well, all these cars have in common. They're all great cars, and they all come with the Warren Henry Advantage, which is a long list of services. It includes, of course, the complimentary loaner if you have to leave your car for service. They'll give you, they'll polish up the rims if you scrape them up. They'll give you new keys. If you lose your keys, they'll guarantee you're getting a great price on your used car. They'll guarantee you're getting a great price on your new car. And they'll give you 3 days to return your car if you don't like it. Guess what? Doesn't happen. People love those cars. My wife just got the brand new QX60. What an amazing vehicle. So join me. You heard about my beautiful wife, Vivian. My mom, she's got one too. Lots and lots of my friends and more all the time. And it should also be you. Remember, always the best price. Always the best service, always Warren Henry.
Carlson from Carlson Integrated. You know, a lot of our clients find that they can do anything, but not really everything. We are always excited to jump in and help. So whether you need another set of hands for a project or even comprehensive marketing management, our team of marketing mavens would love to have a conversation with you to see if we are the right fit. We do everything from logo and design work to email outreach and social media to writing and thought leadership. And here's a fun one. We are now offering our fabulous ebook of top 10 marketing tips on our website for free. So head over to carlsonintegrated.com and grab a copy today. And please always let us know how we can help. My email is Becca, that's BEKAH at carlsonintegrated.com. That's BEKAH at carlsonintegrated.com.
Rebecca Carlson's tremendous. In fact, Jonathan Stein, who's on the show today, introduced me to Rebecca. Rebecca is a tremendous asset to the community. She helps my clients and I look good both on the web and on our prepared documentation. I personally and highly recommend Rebecca and her team. Hey, give me a call. I work with families from all over the world. I've got a meeting with a group from Latin America a little bit later today. I've been working with families from the US, Europe, Latin America, the Middle East, everywhere. And they all come to me because they need their insight. They'd like to have an off-balance sheet real estate expert that can help navigate them through the changing times. And hey, that's me. So reach out to me, DM me, capital, investment sales, just consulting. I've got it all. And I team up with people like John and Jim all the time to execute deals. So reach out to me. And remember, whenever you call me, it's always all about you.
Welcome back to Freed on Business. Connect with us on LinkedIn, YouTube, Facebook, and Twitter at Jim Freed or at Freed on Business, and on Instagram at Jim Freed1. Now, back to your host, Jim Freed.
All right, we're back, and the real estate market's been changing. A lot of people have been on summer vacation. They're coming back. They're seeing that interest rates have gone up 150 basis points in the beginning of the summer. That's had a significant impact on the economy and on real estate. We're here with two people who've seen it all. We've got Jonathan Stein from Inland, and we've got Jim McCarthy from Jameson Capital. Boy, you guys look great. You certainly look like you know what you're talking about. Today, we're going to prove that maybe you do. Welcome to the show, guys.
Thank you.
Hello.
So, past is not supposed to predict the future, but the past can tell us one thing, that we have absolutely no idea what's going to happen specifically, but I think we kind of know where we are in the cycle today, where we're going to be in the next few months, and on the back end, what may happen. Rates have gone up about 150 basis points. Jonathan, you guys buy a lot of 1031 triple net type deals. As interest rates move, that has an impact on your business. What's Inland seeing right now? And first of all, welcome to the show, John.
Thank you. Well, first, a couple housekeeping items. One, thank you for having me on this show. Two, I agree 101% about Becca, that she does a fabulous job. And three, it was interesting. I was thinking that, you used to be a new friend of Inland. Well, now you're an old friend of Inland. So thank you. To answer your question, there is an impact, obviously, in the bottom line where properties are going to get underwritten with a higher interest rates. What we've seen is, at least right now, ownership has not accepted it, if you will. They're still keeping with their prices, even though that the property may not or doesn't pencil out. So that's the initial impact that we're seeing. And yes, we like to acquire property and put them into our 1031 DST 1031 program. Those things we market through a broker-dealer network throughout the country to investors, and not just 1031, but investors in general who want to go into real estate without all the headaches of managing it themselves with the property turnover in apartments or whatever it happens to be. It's really a real estate investment for someone looking to clip a coupon and get a check every month.
That's terrific. And Jim, what Jonathan was talking about was price discovery and capitulation. I don't think that we've seen capitulation in the market generally. I don't even know that we've seen price or value discovery yet, but that's generally what happens at this point in the cycle. The market starts to turn, and then there's a lack of transactions as this dance occurs between principals, buyers, and lenders. Jim, how does this compare to what you've seen in the past, and how long do you think it might be before there might be some capitulation across the market?
I think it's going to be a while because, well, first of all, it's summer, so nobody has to do anything, and they can say they're on vacation, so they don't have to admit there's a problem. Secondly, the government has gotten used to letting the banks kick the can forward, so those provisions are already in place. Plus, the banks have been pretty conservative on their underwritings, and what I'm seeing is not so much an increase in rates as a reduction in proceeds. So they're covering themselves on loan to value because there's, in most cases, there's still enough cash flow because rates are so low. There's room for debt coverage to move. The real issue we're going to have is, I think, on LTVs, because you had people borrowing, they're putting up 10% of the money and getting 90% between a first mortgage and a pref equity position. And if you're doing something buying it at a 3-4 cap, it doesn't take much of a movement in cap rates to wipe out your equity. So it's not like in the old days where you bought something on a 6 cap and it moved to a 6.5 cap. It's okay, you had a loss, but you could live with it. You buy it at a 3.5 cap and it moves to a 4.25 cap, you're wiped out and your pref equity is losing money.
So then, Jim, what would you recommend to the borrower that has that high leverage situation? Because just today, you and I priced out some what I would call trophy office buildings, and there's a significant pullback, but the pullback was really on proceeds and LTV, not really on rate. Rate's kind of stable and steady, but it's the proceeds and the LTV. So people are going to have refi risk, and I guess that's what you're talking about on the current loans that are being originated. People are looking down the road and want to make sure that they don't have that kind of gap.
That's going to be the big issue. Until you're forced to realize the loss, you can ignore it. I mean, you'll have to tell your investors something, but there's cash flow from the property after debt service. So you just keep going on and you hope the market turns. And I know a lot of investors who are saying they think interest rates are going to go back down, that they're just holding off. I have one gentleman who stopped refinancing some properties because he said, why refinance them today at these interest rates? I'll wait 6 months when the rates go back down and then I'll refinance it. I think that's a losing proposition, but it's probably what a lot of people are saying.
Yeah, well, one of the things is that the base index goes up. The other is that the spread over that index goes up. And that's really something that is very elastic in the marketplace. John, you deal with a lot of individual investors. What are you hearing and they typically come to you through channels like the RAs. First of all, what is an RA, and what are you hearing from that channel? Is there any noise coming out of that channel? What are they telling you?
It's the registered investors who have the contact with the actual individual investors that we market through them to, and there is a concern in the marketplace because we have all this tumult, if you will, with the current administration. For example, the 1031 exchange that the government has been going after. I think it started with Obama or maybe a little before, something like that. And so it's been about 10, 12 years at least that they've been trying. We hadn't heard anything for the first year and a half or so from the current administration. But I believe with this new proposal, or it was actually signed yesterday, they are going back after the 1031 in 2023, which means that they're going to limit the cap that you can do a like-kind exchange to $500,000. So that will have a tremendous issue with the entire industry, of course, with the investors. And part of it, which the unintended consequences are, if investors, and I'm talking about the mom and pop investors, not Blackstone or something like that, if they see they can't work on improving their property, they're going to stop putting in new carpet, upgrading their property, new kitchens, bathrooms in their multifamily, etc. So there's a lot of unintended consequences that goes along with that bill. It hasn't been passed yet, but again, the rumblings are coming up again for 2023.
Sounds like we need to go up to Capitol Hill, because what you're discussing is really an impact on affordable housing across the marketplace. Affordable housing is going to take a big hit if the owners don't reinvest.
Yes, that'll take a hit. But also the tax accountants, attorneys, there's multiple industries that are going to take a hit.
Well, this is great information. We're coming up to the break. I really appreciate it. Both guys have committed to sticking with us through the show. So we're going to have some great feedback. I got my gray hair online. They got their gray hair online. I got a 5 head. They got maybe a 5 or a 6 over there. So we got all kinds of knowledge. We're going to be bringing it to you. I want to thank Jonathan Stein and Jim McCarthy for sticking with us and going through the show with us. Mr. Mendoza, the show is yours. Well, if you're looking to buy or lease a car, you want to get every advantage that you can. That's why you have to check out our friends at Warren Henry. I'd like to thank Larry's in, Warren's in, Abe Cohn, Ismet Yagzi, and the rest of the team over there for being with us now for 10 solid years. We're in our 11th year with Warren Henry. We love them. It's tremendous to be part of the Warren Henry family. So if you're looking to buy or lease a car and you want to get every advantage that you can, check out Warren Henry, Land Rover, Range Rover, Infiniti, and Jaguar at 151st and Biscayne. That's where I go to get my car serviced. I love my service person, Maytal Stark. She's been there forever. She treats me, my mom, my beautiful wife, Vivian, with amazing deference and courtesy. She's an amazing person. Up in Gainesville, I'll be up in Gainesville in a few weeks. I'm going to check out the Audis up there. Probably going to try to get one of those, either the A6 or the A8, probably the A8. And then down in the Keys, well, they sell everything down in the Keys. Jeeps. I'd probably go down there if I want that fancy. I love those Jeeps. They're so good looking. All those cars, they have something in common. They're all great cars, and they come with the Warren Henry Advantage, a long list of services that you've come to expect, including complimentary service loaners. They'll polish up your wheels if you scrape them. They'll give you new keys if you lose your fancy keys. And they'll, of course, guarantee you're getting the best price on your used car or your new car. And they'll give you 3 days to return your car, which nobody does because they're such great cars. So join me, my beautiful wife, Vivian, my mom, lots and lots of my friends. We're all members of the Warren Henry family. You should be too. I love doing that. You should be too. Always the best price, always the best service. Had to do it again. Always Warren Henry.
Can AI supercharge your real estate analysts? With Deep Blocks, you can now canvas entire cities in minutes. Search by total buildable, potential units, and uses allowed. Now live in 100 cities. Book a private demo and supercharge your real estate analysts. deepblocks.com/demo.
Olivia Ramos and the folks at Deep Blocks, some of the smartest people I know. I recently got the tutorial again from Olivia. I really need to take the time to exploit their artificial intelligence service. It really is a time saver. It's amazing. It's amazing. In fact, I'm sort of don't even want to promote it because it's really competition sometimes. Anyway, reach out to me, Jim Freed. There's my email. There's my phone. DM me, email me. I work with all kinds of different families. A family here in Coconut Grove recently called me and asked me to do a loan on some retail property they own throughout Coconut Grove. Got them a quote in one day. Guy hand delivered the loan application to me just now. I'm going to go down after the show and hand it to my client. Hopefully we'll be able to close in 30 to 60 days, just depending on the time it takes to get the appraisal in. Great rates. Great recourse, just tremendous service. I've got another client from the Middle East. We're doing a similar kind of loan from him with a different, smaller bank. And again, we're getting great terms, got the turnaround in less than a week. So if you need some insight, you need some access, you need some visibility, you need to know who's who and what's what, reach out. We do consulting, we do investment sales, we do real estate capitalization. I partner with Jim McCarthy on a lot of different things. Jim brings his access from New York to the table. And there is one thing that's always for sure is that when you reach out to me, it's always, I'm going to do it again, all about you.
Welcome back to Freed on Business. Connect with us on LinkedIn, YouTube, Facebook, and Twitter at Jim Freed or at Freed on Business, and on Instagram at Jim Freed1. Now, back to your host, Jim Freed.
Hey, we're back with another great edition of Freed on Business. Today, we're talking about past, present, and future, the capital markets, real estate investing, what's going on, and what's the impact to me. We're joined with two tremendous guests. We've got Jonathan Stein. Jonathan's one of the original guys up at Inland. He runs their marketing. He can tell us what's going on in the ground on the individual investor standpoint and on the institutional investor standpoint. We've got Jim McCarthy on. Also, Jim's my partner in New York. Jim ran the book for one of the big life insurance companies, worked at one of the big banks, and has then represented offshore investors and institutions for many, many years. Welcome back, guys. Thanks for being here.
Thank you.
Now, I'm in Miami. It's lunchtime. It's summertime, and that means the dark clouds are forming on the horizon. Sounds like a great metaphor for what's going on in the industry. Some of this is caused artificially by the I don't want to say artificially, caused by the interest rates being raised. Some might say that's finally occurring because we've been pumped up by cheap money for so long. Other people will say that we should keep being pumped up by cheap money, but we're not the Fed. We got to deal with what happens. The interest rates are rising, at least for now. It's having an impact on values in the 1031 market, in the investment market. Jim and I are in the market on some office building loans. In certain places, people will quote, in others, they won't. Jim, what do you think about the time frame that this will have before deals will start to happen? In other words, we're right now in the time of price discovery and capitulation. How long is that going to last?
After the holidays, into the first quarter of next year. People will be back in September. I know in Florida and southern states you start earlier, but New York, it's not until after Labor Day before people start functioning. So they'll come in September and say, oh my God, what's going on? Let's all get together and talk with each other. So then we'll be into October, and suddenly it'll be, the end of the year is coming. So there'll be a rush to try to do something, but it'll be mostly workouts, extensions, where people are looking for higher returns, relatively speaking. The institutional market, I don't see until after the new year when it settles down and people start accepting what the new price discoveries are.
I saw the same thing in the residential market down here in Miami. At a certain point, people just said, okay, I'm sticking my finger into the plug, letting it do what it wants to me, and I'll stay where I have to stay until all this passes by. John, we talked about the incredible uncertainty that the 1031 exchange market is facing. You also do business cross product types on the investment market. Also, how's your investments and development business going?
Well, let me correct you on one thing. I'm not the head of marketing, by the way. That's Rich Jurek. I'm involved.
Oh, sorry for giving you the promotion. We've had Rich on the show too. Apologies, Rich. Please keep me in your good graces.
He will, I'm sure, as always. Anyway, my official title is president of Inland Real Estate Commercial Brokerage, but I'm involved in the other aspects of the business. So the answer, what was your question? I'm sorry, Jim.
I really don't remember at this point. No, the question was, how is the dynamics in the market affecting the development side of inland?
The development side, we have two development companies, actually, one based out of Oak Brook, Illinois, and the other is in Atlanta, Georgia. Well, it makes it tougher to do because you've got the labor shortages going on, the material shortages going on, or the high prices, rather, of that. So that all has to be factored into the development. So it's affecting it. It is harder and harder to find good developments that make sense. And, of course, you got owners who want to sell their either raw land or rehab land for more than it works, or certainly more than the numbers pencil out to make a profit on the development. So that's what's going on there with the interest rates, not just creeping up, but they are up. So, and I disagree. I think the low interest rates were a good thing to spur the development versus the higher interest rates. And you see it in the residential market. People are stepping back. They can't afford the house anymore. That extra $200, $300, $400 a month doesn't fit their budget now. So, and you're right. They're waiting and seeing what's going to happen. And I also agree with Jim. We're talking some first quarter 2023.
So, Jim, in the period of price discovery and pre-capitulation, we've all been around for a while. Something needs to be done. People just, still need to make money. So what are some of the ways that you've seen in the past during this type of a period what are places people can focus on in order to keep their deal pipeline filled up? Because I got to say, our pipeline has never really been fuller than it is right now.
Well, yeah, it's different levels. I have a pension fund that I'm working with who's buying multifamily, mid and low rise. And that's a difficult market because cap rates are moving, except that they have a 10 to 20 year event horizon. And they've just been allocated $1 billion from their parent pension fund to put out with the intention they go out within the next 6 months. So they're a little less price sensitive than most. So they're still active. The Blackstones of the world, I mean, they're so big, nothing they do is going to move their needle very much, so they can stay active. The smaller ones, guys, are the ones going to have trouble because, as Jonathan said, the numbers don't pencil out anymore, and you have to start seeing some creative financing. For instance, the deals we're working on, where we're bringing CPACE. So you're taking CPACE instead of a bank loan, and then you're taking a private lender who in the past you'd say it's too expensive, but when you average them out, it's still talking 6-7% cost of funds for 75-85% loan to cost. But you start getting closer to it penciling out than a bank coming to you and saying, well, we'll give you the money at 5.5, but we'll give you 50% loan to cost, and go get equity for the other 50%, and you got to pay the equity, 20% return. It's just can't work out unless you fiddle the numbers and have an investor who either doesn't understand or is looking to put money out and make fees.
Now, you mentioned CPACE, and I know that Inland is starting to do CPACE. Just in general, to throw it out there, CPACE, I originally became aware when it was just for houses, roofs and electrical and windows and stuff to fix your house to make it hardened for hurricanes. Then I ran into a couple of smaller investors that started doing it, and they could do $3, $4, $5, $7 million slugs on the real estate. Now I'm hearing that there are investors, life insurance companies, pension funds that can do $100, $200, $500 million slugs simply of CPACE. And I'm going to hold it right there before anybody answers, because it's what we do. We'll talk a little bit more about that on the backside of this break, because I know Inland originates it, and I know that Jim's got some really interesting sources too. So after this, we'll talk about creative new solutions to help your capital stack still work here on Freed on Business. Mr. Mendoza, it's yours. I love those aerials. I go through and I try to determine or identify which piece of real estate it is. I really love it. A lot of times we're flying over something that I've actually done a loan on. It's our 10-year anniversary, which means we're in our 11th year of having Warren Henry as a sponsor on the show. I can't tell you how much we appreciate Larry Zinn, Warren Zinn, Eric Day, Yizmit Yagzi, and the rest of the team at Warren Henry. They treat my family like it is their own. So when you're looking to buy or lease a car, every single person always wants to make sure they get every advantage that they possibly can. Go to Warren Henry. Look up Larry. Land Rover, Range Rover, Infiniti and Jaguar. That's 163rd and Biscayne, 151st and Biscayne. Up in Gainesville, I'll be there real soon. I'm going to be looking at the Audis up there. A8, probably my car. Watch out, here I come, guys. Down in the Keys, they've got everything down there. I particularly like the really hot-looking Jeeps. They're really cool. All those cars come with the Warren Henry Advantage. They're also great cars. The Warren Henry Advantage includes a long list of services, includes they'll polish up your rims. They'll make sure you get the service loaner. If you lose your keys, they'll help you. Well, I guess the key doesn't rattle to the car, but they'll help you replace that digital key, and they'll guarantee a great price on your used car, on your new car, and they'll make sure that if you get 72 hours to like your car, to tell if you like your car. If you don't like the car, They'll allow you to exchange it. Nobody ever does that because they're great cars. So join me, my beautiful wife, Vivian. She just got the brand new QX60. It rocks. My beautiful mom, she's got one of the Infinities too. Lots and lots of my friends. We even got a text during one of the shows when somebody was waiting in the service line, listening to the show on Bluetooth. Always the best price, always the best service, always Warren Henry.
Carlson from Carlson Integrated. You know, a lot of our clients find that they can do anything, but not really everything. We are always excited to jump in and help. So whether you need another set of hands for a project or even comprehensive marketing management, our team of marketing mavens would love to have a conversation with you to see if we are the right fit. We do everything from logo and design work to email outreach and social media to writing and thought leadership. And here's a fun one. We are now offering our fabulous ebook of top 10 marketing tips on our website for free. So head over to carlsonintegrated.com and grab a copy today. And please always let us know how we can help. My email is Becca, that's BEKAH at carlsonintegrated.com. That's BEKAH at carlsonintegrated.com.
And here I am, back in the frame. Hey, reach out to me. I help lots of families execute their business plans, real estate operating companies too. We've got lots of high net worth investors we work with. Jim and I partner on a bunch of folks out of New York that come down here to Miami to do deals. We've got lots of investors that we know from New York through Jim again. Jim and I partnered on perhaps the biggest deal that I've done here in the last couple of years as well. So thanks, Jim. You're the man. I really appreciate having you as a partner. But reach out to us. I've got friends, families from Europe, Latin America, the Middle East, all over the United States. They come to Miami, and we help them execute their plan. We put them together with institutions. Sometimes we help them see things in a different way. I'll give you an example. One of the families that I do business with wanted to do another deal with one of the lenders that they've done repeat business with over and over again. The lender is becoming too small to handle the length of my borrower's business, so I sent it to a larger bank. Well, my friend and borrower wanted to go with one of his friends. The friendly bank wasn't the best bank for his business at this point. So I had to say, hey, dude, let's look at this other bank too. And now we're going to probably start doing business with that other bank. Now, it's not as simple as that. Lots of other nuances that helped us make that decision. That gives you a little idea about what we help people do. We help people understand the nuance of the transaction in the marketplace and help guide them to their best execution. I've got a group from Latin America coming into town today. They want me to tell them about what neighborhoods in South Florida they should develop in, and then introduce them to people they should joint venture with. If this helps you get clarity on what you're trying to do with your business plan, reach out to me. There's my numbers. And remember, whenever you call me, it's always all about you.
Welcome back to Freed on Business. Connect with us on LinkedIn, YouTube, Facebook, and Twitter at Jim Freed or at Freed on Business, and on Instagram at Jim Freed1. Now, back to your host, Jim Freed.
We're on. The theme is, oh my gosh, what now? People are coming back from their summer vacations and realizing that the world has changed. Residential, investment, loans, everything's different. We've got two tremendous experts who've seen it all at this point. Jonathan Stein from Chicago with Inland Real Estate up there. He runs their commercial brokerage division, and he and I have been friends for quite some time. Thank you, John. I really appreciate that. We've also got Jim McCarthy on from New York. Look at this, Miami, Chicago, New York. Everybody should be packing up their moving vans and coming down here. Jim has had a long and storied career. We met a long time ago. We worked together as partners. Jim works and does business for a lot of the families up in New York as an underwriter and helps execute their plan. He's also worked with institutions for many, many years and ran the book for one of the big life insurance companies on a national basis. Welcome back to the show, guys. Now, we were talking about the impact of CPACE. Inland does CPACE. Jim, you've got an institution now that you're working with CPACE. In the past, CPACE has been limited first to small deals on houses. Then it was bigger deals, and now it's really, really big deals. It's also constrained by the municipalities that need to approve CPACE coming into their marketplace. John, tell me a little bit about the CPACE program for inland.
Well, the CPACE program, you're right, started out in residential in California about 10 years ago, I'm guessing, something like that. And it was a little, let's say, sketchy. Little old ladies didn't really know what they were doing when they put on a new roof and were presented a CPACE loan until, the bill came with their tax bill. But it has moved away from that, and it has gone into the commercial end of things and has been taking off. Now, it's a easiest concept, but it's somewhat complicated too. So you have to walk through it with someone who knows what they're doing, which is Inland or any other provider who knows what they're doing. And it's a great tool for people who do not want to put their own money into the deal for rehab or redevelopment or ground up. And you're right, it adds to the capital stack up to 25% of the total project. And there's a lot of good things about it because it puts you into the realm of basically with energy saving. That's the bottom line. The saving of money using energy efficient products, whether it's elevators, roofs, wraparound, cosmetics, insulation, windows, solar, lighting, you name it. So it's a great product. There has to be a fit, of course, making sure. And, it's not a good product if you have your own money because of, you're paying out the interest rate to do it. But it's a great tool. And getting to your concept, yes, Inland does deals from as small as $100,000 up to $10 million. There was a deal in New York, an office building. I think it was Noveen that did it, $100 million. So it's growing and getting better and better as far as the sophistication and the money put behind it. Noveen bought an existing company, so they see potential there. Obviously, if they're throwing their hat in the ring. Inland is a smaller player, if you will, but we like to think that we give the best service possible to clients.
Now, Jim, we do now have a lender that does the $50 to $500 million loans. That would be a different profile than what John was talking about. What's the profile for the institutional investor that you and I are working with that's doing the $100 to $500 million slugs?
They're looking at it more as an institutional, a bank type underwriting. For instance, I apologize, John. I didn't know Inland did CPACE. I'm doing a small deal now in Illinois. It's a renovation, primarily an elevator replacement system. So it's only like a $1 million loan. But it's very easy to do because the underwriting is very safe. They're in the level of the property tax, so it's not like they were worried about LTVs. The biggest concern is that it has to be an eligible expense, and it has to be authorized by the state and by the municipality. It's not just the state that has to authorize it. You have to have a municipal ordinance as well, which is one of the problems in New York. Like in New York State, you can do it, but New York City, you can't because there's no city ordinance at the moment. Same thing in Florida. Most counties are the ones who put in the ordinances, and most of them have done it, but a couple haven't done it. So it's a patchwork across the country. But it's a very simple thing. It's like the appraisal requirements. The appraisal has to be within a couple of years. It's not like you have to run out and do a new appraisal. The title and survey have to be up to date is the main requirement. So it's a much easier deal to do than with a bank. And the rates are comparable. On the bigger deals, you're doing an institutional type deal, and you have to do the appraisals and property conditions and everything that everybody else wants. And you have to find a lender who's willing to come behind CPACE, which is sometimes not as easy as it sounds. The banks look at it and say, well, CPACE is at the property tax level, so they get paid before we get paid from cash flow, so they're ahead of us. And we can't take a second mortgage position, even though they're technically a first mortgage. Other banks look at it and say, well, CPACE can't default and be accelerated and foreclose. So if something goes wrong, we know that they can't pull the plug and have a project problem, and to solve the issue, you just have to solve the bank's issue. So some banks say, okay, well, we're in pretty good position if there's a default. So it's been an interesting conversations with some of the banks. And some of the CPACE lenders, to be perfectly blunt, have no idea what they're talking about. And they tell people, oh, it's like pref equity. It's on top of your mortgage. Well, it's not. It's in front of your mortgage. And the banks are looking at it and saying, okay, if we're going to lend you 65%, and CPACE is coming in for 20%, well, we'll give you the 45 difference. So we're still, our last dollar exposure is still 65%. So it's not like you're going to get to 65 from the bank and another 20% from CPACE.
So it sounds like it's actually, while it seems very easy on the front end, it's rather a complicated solution. And again, this is where you and I come in and where John's team comes in. We've had the team on that does CPACE before on the show for Inland. It really sounds like you need a guide. One of the things that I've been doing most recently is for a bunch of my high net worth investor friends is just merely managing the process for them, because it's cumbersome, complex. And if you drop one of the files or the pieces, you can really have a problem. Jim, what specifically are the product types that somebody could have a $100 million or $300 million CPACE loan on?
Depends on the second financing. Lender we're dealing with has a financial partner who wants hospitality. And they're doing fairly large, fairly aggressive loans on hospitality construction. You can go to another CPACE lender and they'll say, we don't have a lender behind us who will do hospitality, but we have somebody who will do multifamily. So to a certain extent, you have to know what that particular CPACE lender is able to do, or bring the second source to them. Or the other way around. I have a lender who is doing CPACE. They're doing the piece behind CPACE, and the CPACE lender that they're dealing with is expensive. So I'm now bringing them to a different CPACE lender who is less expensive, so the average rate will come down. And they just thought, they talked to two CPACE lenders and they were both quoted the same rate, and the client was willing to pay it, so they didn't really do any further, and they're about a half a point higher than necessary. So it's still a young field, and a lot of things have, for instance, as I said, you have to have the ordinances. So one of the transactions I'm doing, we're actually have the CPACE lender and the city working together to draft the ordinance to authorize CPACE, so my client can take the CPACE loan.
Let's take a break right here, and then we'll have our final segment, and we're going to look into the future. We're going to talk about things that people should be thinking about now that will be coming to fruition in just the next few months that'll have a dramatic impact on real estate going forward, on liquidity and structuring. And you guys now know what I'm talking about. We'll talk a little bit about tokens, and we'll also talk about ESG and greening the real estate environment after this. Mr. Mendoza, you must hear me. Throw the switch. Oh, I was just sending out a little LinkedIn update on what we're going to talk about next. You guys busted me. Hey, I cannot say it enough. For the last 10, now 11 years, we've been officially part of the Warren Henry family. They've been sponsors of our show, and they are tremendous to work with. I want to thank Larry's in. I want to thank Warren's in. I want to thank Eric Day and the rest of the team up there for being part of our team. And we're so proud to be part of theirs. Hey, you should join the team too. When you're looking to buy or lease a car, you want to get every advantage that you can. That's why I have to check out Warren Henry, Land Rover, Range Rover, Infiniti, and Jaguar down here at 151st and Biscayne. In about a month, I'll be going up to UF for the annual real estate conference, and I'll be going up to the Audi store up there, looking at the cars, and probably coming back with my A6 or my A8, probably my A8. And Down in the Keys, they've got their store in Key West. They sell all their great cars. What do all those cars have in common? Well, they're all great cars, and they all come with the Warren Henry Advantage. That means you get complimentary key replacement, complimentary polishing up of your rims if you scratch them. You get the complimentary service loaner. They'll guarantee you get a great price on your used car. They'll guarantee you get a great price on your new car, and they'll give you 3 days to return your car. Nobody really ever does that because they love those cars. Hey, so join me, my mom, my beautiful wife, Vivian. We're all members of the Warren Henry family. You should be too. Always the best price, always the best service, always Warren Henry.
It's time to stop the hate and spread some love. You are beautiful, you're smart, you are awesome, and you never have to change for anybody. You have the voice and you have the power. We are so much stronger when we come together. It's your choice, so choose to be inspired. Choose to be accepting, be strong, be brave, be awesome, be daring, be kind. Choose kindness.
It's such an old concept, but it's unfortunate we have to say that it's time for something new and we should all just be kind to each other again. But that's a tremendous message, and we're so glad to send it out every single week. Hey, reach out to me. I work with families and real estate operating companies and investment firms and life insurance companies. Talked to one of the big life insurance companies today. In fact, the one that has my life insurance policy, about investing. We invest with them. We invest beside them. We bring them to our clients. We help people evaluate the marketplace and different loans. Sometimes all we do is what seems to be a lay down loan, and suddenly it turns into quite the project, because the one thing I can tell you about real estate is you never know what's around the corner, no matter how hard you plan. Always plan for the contingency. So reach out to me, DM me, debt, equity, loans, investment, sales, consulting, ideas, camaraderie, all that stuff. We bring it all. And insight into the future, which is what we're talking about today. So my numbers are down there. My email's down there. DM me, email me, whatever you want to do, reach out, because whenever you reach out to me, I can tell you one thing for sure. It's always all about you.
Welcome back to Freed on Business. Connect with us on LinkedIn, YouTube, Facebook, and Twitter at Jim Freed or at Freed on Business, and on Instagram at Jim Freed1. Now, back to your host, Jim Freed.
All right, we're back. We're talking about the past, the present, and the future, and what the impact is to me, or like I titled the thing, oh my gosh, what now? We're on with some great people. We've got Jonathan Stein, head of brokerage, commercial brokerage for inland real estate up in Chicago. We've got Jim McCarthy from New York. So we've got the bases covered here. Jim, we were talking a little bit about new ideas. We started the show off with, we're here at the time point where interest rates have gone up. Pricing is changing. We're talking about capitulation. We're talking about price discovery. We're talking about people thinking about interest rates are coming down, so it's really sticky. Now let's talk about the future and some creative ideas. I know you're working with some folks on this ESG fund. I know that there's a lot of people that are looking to do green energy deals and sophisticated things in that regard. And I know that there's a lot of new line syndication out there with tokens. We only have a little bit of time. How can all that stuff kind of come together?
Well, ESG is becoming an absolute requirement for companies. The SEC is requiring it into the reports. Investors are requiring it. The European Union has just put in a financial requirement that all asset managers have to make ESG information available to their investors. So it's a huge market, and it's a huge market of greenwashing. ESG reports tailored to make it look like companies are green. There was one recently with McDonald's where they simply excluded a major category of carbon pollution. So they could say, well, okay, this bond is green as long as you don't count this other stuff in. That would make it really a bad non-green bond. SEC is cracking down in the US on that. So there's a huge demand. In fact, one of the pension funds I mentioned they've decided their entire global real estate fund has got to become carbon neutral by 2025. And they want all green investments by 2023, balancing it, what they have. So they've allocated $3 billion to buy properties that are LEED Gold or LEED Platinum to balance out their carbon position. So there's a huge demand for it. There's a lot of fake ESG stuff. There's a lot of debate on what exactly ESG means. E is environmental. People think it means energy. S is social. So it's to the diversity of your workforce. For instance, Boston just put in a requirement that developers have to report on the diversity of their workforce and their company employees. And G is governance, which is how you set up your company to enforce the E and the S. And a lot of people just don't know what these mean, but they're under pressure. There's a shortage of consultants who know this business. So it's a hot area, and it's going to become more important, but it's an area full of problems and misdirections and people not really knowing what to do. Because, for instance, social could be as simple as you run a nutrition program in your multifamily project, especially if you have a seniors project. You bring in a nutritionist once a month to give advice. So you've then met some of the ESG requirements. It doesn't have to be we would tear out the boilers and put in a solar system. It ties in nicely with CPACE because CPACE is paying for renovations that are energy efficiency. You get some of the E in that. The tokenization you mentioned was, tokenization. There's two things. There's the cryptocurrency stuff, which is basically playing foreign currency markets with digital coins instead of with national currencies. And then there's tokens as a legal document that's replacing limited partnership shares. So you can syndicate a property instead of doing an old-fashioned syndication with LP shares and so on. You can do it through a token. And then if somebody needs to get out or wants to get out, instead of looking for a specialist firm that buys LP shares, you can sell the token on the open market. Ain't there yet. What we're telling our clients are set up your documentation so that you can do a token, or maybe even do the token to have it ready, but don't count on it for raising money because the institutions are just getting into the business now. There's been a couple of real estate things, but you'll see that a lot of them are, Joe's got a server in his basement. He put a house up on it and said, I'll show you shares in the house. That's not a viable business. Some of them are larger buildings and they're not doing the SEC registrations. They are securities. People try to say, oh, they're tokens, they're not securities. Well, the Howey test doesn't make a difference whether it's a piece of paper or electronic digit. If it meets the Howey test, it's a security. So the SEC and MiFID in Europe and the EU are cracking down, but it's becoming more institutional. T0, which is the oldest of the alternative markets and who did the first real estate offering, is now owned by the company that owns the New York Stock Exchange, the London Stock Exchange, I think 12 other exchanges. The deal we're working with Tokeny, which is owned partially by Euronext, the EU's largest stock exchange, and Apex, the world's largest asset management company. So they're going to be there. And I tell people, first quarter of next year, you'll see institutions seriously getting into it as a way to do business. If nothing else, it's a great way to do your bookkeeping because everything is now automatic onto a hyperledger instead of having accountants sitting in a room with stacks of paper and computer files trying to figure things out. So it'll grow. It'll be the next wave, but you can see it building up. It's not there yet.
Well, it's almost time for us to go. John, what is the future like to the folks that are running the Inland Brokerage company? What do you see as the future? You're going out to the events now. You're seeing folks. What's the street telling you?
Well, there's always going to be real estate as an investment vehicle, I believe, one way or the other, from the small non-pas up all the way through the institutions or the Blackstones and insurance companies and all that. Just one comment on the ESG, though. is that it's certainly gaining more and more steam. And I like to see more the economics of it, like C-PACE loans, where it makes sense. There's energy audits on whatever component you put in there, versus the government kind of controlling it. And it's obviously important for the planet and all that, but I find it, not to get political, the Chinese and India, they're doing nothing. And I wonder what's going to happen or how long this is going to go on where they're doing nothing. And it's all, the onus is all on the United States. So just a side comment on the ESG.
No, we welcome everybody's comments. Listen, it's time to go. I want to thank Jonathan Stein for being here with Inland. I want to thank Jim McCarthy, my partner in New York from Jameson Capital. The podcast will be available in just a few minutes after Mr. Mendoza packages it. I'd like to thank our sponsors, Warren Henry Automotive and the University of Florida Center for Real Estate Studies. And I want to thank our guests again. I want to thank you for watching. And our next live broadcast will be next Wednesday at noon. All of these shows are archived on the Freed on Business website. And I want to thank everybody for joining us. Remember, my favorite part. No, my favorite part's the interviews, but I like this part too. The person that wants to do something finds a way. The other finds an excuse. Now go out there and make it happen. God bless you. God bless the United States of America. John and Jim, we'll be talking soon. See you guys later.
Thank you.
Bye.